Hi, everyone. Matt Clark, research analyst for Money and Markets here with your weekly marijuana market update. Now, before I get started, I want to make sure that you are subscribed to our YouTube channel and make sure you get notified each and every time we post a video. Just tap on that subscribe button down below, mash that notification bell, get notified every time we release something new on our YouTube channel. Also, I'd encourage you to check out our website, moneyandmarkets.com. This is where you can search our proprietary stock power rating system and get the ratings of thousands of stocks out there. You'll be able to see a breakdown of fundamental and technical ratings, which make up the overall stock rating. Just go to moneyandmarkets.com. On the top right-hand side of the homepage, you'll see a search bar. Type in a ticker or company name, and you'll be able to see the stock's ranking, fundamental data, any analysis we publish, and it's all right there at your fingertips. You can build your own watch list at moneymarkets.com and track stock performance, and you can do all that on the site for free. Now, today I'm going to respond to another viewer who emailed me about a particular cannabis stock, and then I'm going to touch on some new data related to cannabis sales. Stephen recently emailed me to ask about Canopy Growth Corporation. He said, I follow your channel and appreciate the in-depth analysis. I often come to many of the same conclusions. I have a question about CGC. Am I crazy to think this company is severely undervalued based on its network and infrastructure for the future of cannabis? The company seems to be headed in the right direction and is executing at a faster pace after David Klein became CEO. I don't agree with the newly announced acquisition of Jetty Vape. However, I understand it. I cannot tell at this point if I'm missing something, as I've been averaging in using proceeds I've obtained from covered calls. Should I move on from this company? Well, those are great questions, Stephen, and thank you for submitting them. Now, first, for those of you who are unaware, and I'm sure very few of you are, Canopy Growth Corporation trades on the Nasdaq. Its ticker symbol is CGC. It produces and sells cannabis products for both recreational and medical markets, primarily in Canada, the US, and Germany. It sells dried flower, oils, concentrates, and soft gel capsules. It does that under several brands, including Tweed, Quattro, Deep Space, Spectrum Therapeutics, First and Free is another one, TWD, The Works, BioSteel, and Tokyo Smoke. The company also is partnering with Nika Health Canada to examine the impacts of CBD-based therapies on post-concussion symptoms. This is part of the NFL's effort to give money to research to find out if there are positive benefits to using CBD to help treat concussion symptoms. So that's actually a pretty good thing. Let's start by looking at the company's stock performance of the last 12 months, and it's really not pretty. CGC's stock has taken quite a bit of a hit over the last 12 months. The stock's down about 79% from where it was this time a year ago. It's also trading below its 50-day simple moving average. Not far off, but far enough to be a little bit concerned and to suggest that this is definitely a bearish turn for the company. I do believe the drop in share price is more conducive to headwinds facing both the broader market as well as the cannabis industry as a whole, not necessarily reflective of the sentiment towards the company, because if you look across the board, most cannabis companies are suffering the exact same downfall. You see this everywhere. There's really no cannabis company that's been excluded from just being absolutely ransacked in the market right now. Now, we can get also a good picture of the company's operations by looking at its total annual revenue. It's one thing I like to look at for every company I examine. CGC had a slight drop-off in revenue of around $2 million from 2021 to 2022. Now, remember, its fiscal year, it's towards the end of its fiscal 2022 year. So when I say 2022, you might think calendar, but Canopy Growth actually has a different fiscal calendar than other companies may. So, this loss came at a time when cannabis sales were particularly strong, especially internationally. However, moving into 2023, that revenue is expected to reach about $471.7 million, which is about a 10.7% increase from 2022. So not bad. By 2024, however, the company's total annual revenue is projected to rise to about $540.1 million. That's indicating a really strong sales growth, especially in the long term for the company. Now, in terms of valuation for cannabis companies, I prefer to look at price to sales ratios rather than price to earnings. And the reason is because price to sales is a little bit more accurate in terms of depicting the company's stock valuation in the cannabis space. Price to earnings is more popular to look at, but just about every cannabis company is really not making a profit right now. So you have to kind of toss earnings out the door because they're not earning anything. They're actually losing money. So there is no earnings. Most are at a loss. And at the end of 2021, and looking at price to sales, CGC had a price to sales ratio of 7.77. That's the lowest the ratio had been for the company since April of 2013, when it was 7.5. However, looking today, with the drop in the market, that ratio is now down to 4.6, which is the lowest ratio the company has ever had since it's traded on the market. That ratio is lower than Kronos Group, which is at about 14.8, Sundial Growers, which is about 14.9, and is fairly level with Organigram Holdings. However, it is actually still higher than Aurora Cannabis, which is right out at 3.3, and Terracin Corporation, which is about 3.8. So to answer your broader question here, Stephen, I wouldn't go so far as to say CGC is severely undervalued. However, it is a much better value in terms of its stock price than it was a year ago or even a quarter ago. The company's valuation appears to be right in line with its peers, and its sales look to be on a solid growth trajectory, as the company is reporting now a trailing 12-month sales growth rate of around 17.4%, which isn't altogether bad. However, in the cannabis space, sales don't necessarily equal a jump in stock price. We are seeing strong headings blowing back all stocks. Not just cannabis, and the drop off of CGC is similar to what we see in other cannabis companies across the board. So in terms of getting out of the stock, I really can't make that call for you, Stephen. You've got to decide if you're willing to see continued drops in the stock price, because I'm really not too sure if we hit a bottom of a dip here, and whether you want to continue buoying your position with covered calls or even put options. If you do, okay. If you firmly believe in CGC and think that this is going to reverse itself, then hang on to it, or maybe just sell a portion of your holdings, not the whole thing. If you just want to cut your losses, if you have a solid stop loss method in place, then follow that rule, follow your method and cut it loose. That's really about as easy as I can make it for you. I can't really tell you what specifically you should do because there's a lot of factors I don't know. Plus I'm kind of forbidden from giving that kind of personal advice in this kind of avenue. So I hope that answers your question, Stephen. And then for asking and for us using it, we are going to send you some free money and markets gear. So look for an email from my team trying to get some information from you so we can do just that. Now, there's one more thing before I go. I ran across some very interesting data that I thought was interesting to share here. For the first time ever, as far as I can tell, recreational and medical cannabis sales in the U.S. actually surpassed, meaning they beat North American sales of Starbucks in 2021, according to Marijuana Business Daily. Cannabis sales hit on the low end, $24.5 billion in 2021. Starbucks sales, however, were only $23.2 billion in North America alone. Now, this is all in spite of the fact that cannabis is only legal in some form or fashion in 39 states and the District of Columbia, whereas coffee, as everyone knows, is legal everywhere. You can get a cup of coffee anywhere. You can't get marijuana everywhere. So it's just interesting that now we see medical and recreational cannabis sales are now actually doing better or actually producing more than Starbucks. Starbucks saw its annual revenue grow by about 25% last year compared to the cannabis market, which jumped 30%. So cannabis is actually performing stronger than coffee. But again, that doesn't translate into stronger prices of stock in the market. Is there some food for thought, something to think about? Maybe we'll touch on it again in a future episode. That's all for me this week. If you do have a question about a cannabis stock or the broader market, just email me. You can reach me at feedback@moneyandmarkets.com. We'll flash that right down below. Or you can comment below on our YouTube channel. We'd love to see that as well. Send your question. If we do send us a question, either on YouTube or by email, and we use it, we're going to hook you up with some free money markets gear like we're going to do with Stephen. You get hats, t-shirts, all sorts of great stuff. So just do that. And we love to see your feedback, regardless of whether you're up or you're down. What are you experiencing in the market? Let us know. Love to see it. Don't forget about all the great content we have on our YouTube channel. We like to provide the best investment insight, not just in the stocks, the market, but into the broader economy and give all that to you for free. You can also follow me on Twitter, where I will give you even more insights, not really just into the cannabis market or the broader market, but sports and tons of other stuff. Whatever happens to strike my fancy when I'm on Twitter. You can find me on Twitter at InvestWithMattC. That's InvestWithMattC. Follow me, and I will certainly try to follow you back. Thank you to everyone who watches our videos each and every week. We want to do it because we're trying to bring you the best insights, not just in the cannabis, but into broader investing in the economy to help you grow your portfolio. Also, check out moneymarkets.com each and every day for content that provides safe, sound, smart, simple, profitable investment information just for you. I'm Matt Clark, research analyst for Money and Markets, and your host of the Marijuana Market Update. Until next time, everyone, safe trading.